Hello, everyone. This is the next step in our accounting journey. We just finished taking a look at the business model canvas, a way to kind of think of your business in a bento box. And we hinted at the end the idea of, okay, accounting is kind of lurking throughout the business plan. However, there are limitations. And one of the limitations is the idea that anything you record in your financial statements has to reflect an economic activity. And I have to be able to attach a dollar value to that because of the historical cost requirement. Now, remember, if I have a great relationship with a customer, well, it's very difficult for me to put a dollar value on that relationship because I haven't paid for it. I've just developed it over time. And so one of the limitations that accounting has is it doesn't go through from a historical cost perspective and value things like customer relationships or a supplier relationship. Anyway, those limitations also lead us into this idea of what are the accounting transactions that reflect these economic activities. And I'm arguing that there's only 15. You only have to worry about 15 transactions, the fantastic 15. Those 15 you can use whether you're a big business or a small business. And so one of the things that we're going to do now is look at those different things. And so the 15 fall into five categories. Okay. When you think about what you do in business, accounting really has five categories of transactions. One, sales. We're selling it to customers. Two, we get cash in from different sources besides our customers. We can purchase stuff on credit. We pay stuff. And then there's a few more esoteric transactions that we need to think about. Not too many of those. This tends to be wind up in with things that are perhaps a little more complex and you don't run into them all the time. But there's a couple in here that you will see on a pretty regular basis. And so that's how I get to the 15. So let's first take a look at the sales to our customers. There's two kinds. One, you could have a cash sale or you could have a credit sale. Okay. The credit sale increases receivables, cash sale increases cash. And so there's two different flavors of those, but the transaction itself is basically the same. I get sales and I have either an obligation for a customer to pay me or they pay me cash straight up. So I think of those as one type of transaction in the way I interact with my customers. The next one I think about is cash receipts. Where do I get my cash from? Well, when I actually collect my accounts receivable, I turn those into cash. So you might hear the term liquidity, and we've talked about that before. How good am I at turning my receivables into cash? The next one, I could, if I had some investments, I could sell them. And those investments, when I turn them into cash, represent a cash receipt. I could sell some of my fixed equipment. So let's say that I have an outdated uh, machine to make stuff. Okay. Let's say I have an outdated pizza oven that used to be a child's easy bake oven. And now I've got this big stone based pizza oven. Well, I'm going to try and sell the other one and I could get some cash for it. Maybe. I also get cash from borrowings or stock sales. And those are really kind of the only ways other than cash sales to customers. So that gets us to transaction. This is fantastic number five. The other ones, I could buy stuff and I could buy stuff on credit. So this doesn't involve me paying cash immediately. And so I could buy some inventory and I'm going to rely on my supplier to allow me to pay them a little bit later. I can buy services and other supplies. So this would include payroll, uh, you know, office supplies, other miscellaneous things that are kind of happening. The big one here, though, is if I need to lay in some some inventory. Like when we talked about the Cheesecake Factory, if I needed to bring in a lot of liquor, then that is going to be an inventory. Hopefully, those folks are going to Brown and Foreman will let me pay them on a credit basis. And then, as we said, we could sell, uh, buy some fixed equipment. And so, obviously, different than selling it because we get a cash for that. Purchases, we can buy it either with the customer. I mean, the supplier financing it for us, letting us pay it over time, or we could go through a bank to get it done. And those are really the three transactions you have in purchases. The next set we have are payments. I could pay to get investments. I could pay cash for my inventory. I could pay, and probably this is going to be accounts payable. We're going to affect that. We're going to pay that off. This would probably be an accounts payable as well. Finally, we could pay off the borrowings that we had, or we could buy something called treasury stock. And we'll talk about that again in a little bit. And then finally, we could pay dividends. Not too likely in startup companies, but nonetheless, that's a use of cash. And then finally, the miscellaneous types. If we do have inventory, moving the inventory around, that's a non-cash transaction. What that means is if I take some material and turn it into something I'm using in the delivery of my service or product, then there's no cash exchange on that. Okay, but we do consume it. So the recording inventory movements is just how does my inventory get consumed? And then finally, these non-cash transactions, the most important one, probably the most common, is going to be recording depreciation. And so, yep, we've talked about that a little bit before. But when you reflect depreciation, most of the times, especially in new businesses, we think about that from a tax perspective. I want to make sure we get our tax deduction for depreciation. But how do we get there? Well, it's going to require a non-cash transaction. So with that, those are the 5 categories. And I finally got down to my 15th transaction. So at the end of the day, there really is only 15 transactions you have to worry about. So with that, we will call this session over. But then we're going to get to the accounting side of the house and how do you actually record this. So with that, thanks for playing along. We'll talk to you again soon. Take care. Bye.